In a world where opportunities are expanding and barriers are breaking for women, it's crucial that there is a dedicated space to learn, grow, and thrive financially. Welcome to another edition of Women's Wealth, brought to you by CM Trading. Here we talk financial literacy and inclusion for women. My name is Titilayo Oyinsan. Thanks for joining us. On The Vault today, we're talking about how to invest in your financial education. Yes, you might have thought you left your education days behind, but it's crucial, essential for building wealth. We also have a trailblazing family business advisor in the studio talking to us about strategies for managing your finances during economic downturns. You need to stay close for that one. And for women's wealth management, we're looking at silver and how this precious metal can help us women grow our wealth. To invest or not to invest? That is the question. All that and so much more coming your way on this edition of Women's Wealth right after the break. All right, once again, it's time for us to open up our vault and figure out what secrets are hidden within. Okay, this is what we gather from our vault today, but to be honest, you should already know this. You need to invest in your financial education. Really important. You need to learn and learn. And how do you start? Well, you don't need to be a guru to make wise investment decisions, but you need to educate yourself enough to understand the market and understand which factors to look out for. Now, here are some ways you can do this. This is a no-brainer. Read and then proceed to read some more. Read books about the basics of investments, and it introduces you to the concept of investing. The basics are so important. You can also attend masterclasses hosted by notable financial advisors with great track records, maybe even book personal sessions with them if you have to. This shows your commitment to making it right. You also need a mentor, maybe from afar or even in person. An experienced investor can mentor you, maybe even online by following their teachings. Extremely important also to learn from online courses. YouTube University, I like to call it. YouTube videos are really great for learning. The internet is in fact an ocean of knowledge, but it's also important to consult with financial advisors to get clarity on specific areas of investments before you put money in. And finally, learn to read and listen to business news, research reports from a financial analyst of your choice. Keep an eye out on the trends and activities of the companies you've invested in. It's a no-brainer, but you cannot invest in something and not be up to date with everything that concerns it. That's it for our vault session for today. We have loads still coming your way on Women's Wealth. Welcome back to Women's Wealth, brought to you by CM Trading. Now it's time for the everyday exchange conversation to happen once again, and our mission remains steadfast, as always, to empower women to navigate the complexities of wealth creation and management. And we are thrilled to have you join us once again for this conversation. It promises to be both insightful as well as transformative today. In an era characterized by its dynamism, its unpredictability, the prospect of economic downturns is the reality that most individuals, families, businesses have to contend with. Today, we're not here to dwell on the challenges. There's too much of that going on all over social media and on TV and on the news, but rather hopefully illuminate the path forward, armed with strategies that can empower us to hopefully weather the storm and emerge stronger. As we navigate this conversation, we'll explore the experiences of our guest who has successfully navigated economic downturns and emerged with valuable lessons and insights. Moreover, our discourse is going to address the role of technology, digital tools in this context. The digital era has ushered in a new wave of avenues for financial management, asset allocation, investment diversification, and so much more. And hopefully we can delve into how these tools can be harnessed to create a robust financial roadmap that aligns with your goals, aligns with your aspirations. This is in line with our commitment to bringing you exceptional voices that inspire, educate, drive positive change. And we have the honor of introducing a true luminary in the world of corporate finance. You know what? I have to take a breath. When it comes to trailblazing, a trailblazing family business advisor, a driving force behind key transformations in Nigeria's business landscape, our guest today is a legend in her own right. Let me breathe one more time. Distinguished career spanning over 15 years, she is not just an expert. She's a thought leader. She's an author, trainer, mentor, someone who's led a really great life and put an indelible mark on her industry. Her journey is a testament to the power of knowledge, innovation, resilience in shaping the destiny of businesses and economies. She's a fellow of the Institute of Chartered Accountants of Nigeria. She's a certified management consultant and Prince 2 certified project manager. Now, she also embodies excellence at its finest when it comes to her academic achievements. She has an MBA from Edinburgh Business School, Herod Watt University, Scotland, and these have definitely propelled her to greater heights. It's really, really great to have her in the studio, especially with her extensive expertise. Abiola Adediran is going to shed light on how women can navigate financial challenges with resilience and confidence. It's great to have you in the building.
Thank you. Thank you so much for having me.
All right, so now you have one of those profiles that makes you want to go and look back and see, wait, what did I do with my life again?
Interesting. I mean, when you were reading, I was wondering, okay, who is she talking about now?
It's definitely you. It's definitely you.
Thank you.
And it's a pleasure to have you here with us. I have to say, when it comes to navigating the issue of downturns, it feels like, especially in our climate here in West Africa, in Nigeria, the downturns haven't turned back up in a very long time. It has felt like the economic downturn has just found further to turn down every single year. It's alarming, overwhelming for both families, individuals. Where do we even begin to navigate this new terrain?
You know, I mean, as I was telling you earlier before we started, that this is such a very timely conversation, especially because we're navigating this conversation from the angle of women and our role in terms of how we play in the market and how we sort of go through, you know, all the challenges that we have to face as human beings, as matriarchs, as home builders, as leaders of businesses, and all of that. And the truth is that these challenges would come and go. I dare say that economies are usually in circles. You know, you have the ups and downs, and like you rightly said, many times it looks like we haven't quite turned back the entire 360 before we get into another low, and then we get into the high and all of that. Yeah. It's the resilience that you need to be able to navigate these things that is really more important. Rather than focus on the highs and the lows, you have to really stay in it for the long haul, right? And for you to be really very adaptable. The way life throws it to you, you must be able to respond, you know, and move very quickly. Imagine yourself as a business owner and the kind of challenges that we've had in Nigeria, you know, in recent times, and we're still going through. You realize that you may not even have been through that sort of thing before, and now you're having to adjust. And for some people, we've been through this many times. And so we can almost say, you know what, this too will pass, that sort of thing. But it's about how you're able to, you know, respond to it in a way that keeps you going. There are times in your business that all you're doing is just surviving. You just want to survive. That's not the time you want to push a lot of growth. That's not the time you want to really be very aggressive in terms of how you're pumping in money and raising capital and all of that. You just want to coast through that moment, right? And really just make sure that the business survives. And then there are times where you then have to go in all aggressive and you're going into all the things that you want to do, expansionary measures and all of that. For me, it's really about understanding the times and seasons and responding to it in that way.
But in the end, if you don't really have the knowledge of which season you're truly in, how do you begin to even start to climb out of certain holes? Now, the issue of surviving the market means some people have to make hard moves, make hard decisions. They have to sell off some things. They have to shut down some branches of whatever they were doing. And this sometimes feels like taking 2 steps back. Instead of moving forward. The average Nigerian is known to be resilient, always pushing forward ever, backward never. But when you have to make moves like that, doesn't it feel a little bit backward in some terms?
Honestly, if you look at other markets, outside of Africa, Europe, Asia, those developed markets, you will find that the businesses that have really stood the test of time have been businesses that have had to make very hard decisions at different times. So there are times when it looks like you're shrinking or, constraining yourself as a business. And there are times where you are expanding, right? I think what is important at every point in time is to really understand why you're doing what you're doing. It's the mission, it is really putting your eye on the focus, not allowing emotions. There's a sense where you feel, oh my God, I'm not supposed to be selling assets. I'm not supposed to be cutting down.
Okay.
And we're not talking about business. In your personal life, when you sell assets, some people just believe you shouldn't be selling your assets. Meanwhile, it may be a wise thing to do in a season of life, right, for you to be able to do so much more in another season. So it's really that understanding to help you really understand what is going on in the economy. Say, for instance, when stocks were down and people felt like, oh my God, I've lost all my money. And if at that point you take, the knee-jerk approach of let me quickly sell, guess what? A lot of people still made money in that downturn, right? So it's really you're just understanding, what's going on in the economy, understanding and playing the long game. That's what I would, typically tell people. Ensuring that you're playing the long game, because when you play the long game, then you weather the storm and then you get advantage of the uptick at the end of the day.
The most basic of strategies that many, let's say, startups are putting out there is to bring on investors. Investors are hungry for profits. They want to see you jump into the green almost immediately. They're not interested in hearing excuses. Then for those who go to the banks, they're under pressure. The economic downturns that have happened over the past few years have really kicked some people in the gut, and they're wondering what to do next. I think where my question is going is the issue of protection. What sort of strategies can people put in place to protect themselves from potentially going under the weight of the downturn?
I usually tell people that, on the journey of building businesses, especially sustainable businesses, you have to recruit stakeholders and partners on that journey with you. So, for instance, maybe you want to bring in investors into your business. Bringing investors into your business is almost like, you're getting married, and you want to be sure about who you're getting in bed with. As a woman, as a man. It's the same thing with bringing investors into your business. Your vision must be aligned. Your values must be aligned. If in a season you're not doing as much expansionary measures as the investor would like to be done, it has to be within understanding of where the business itself should go. So it's not really so much about whether you're holding back or you're not hungry. I mean, for you to really want your business to grow, you must be hungry and stay hungry. As a matter of fact, it's not even only investors that should demand that from you. If you want to build a business that will stand, the test of time and be sustainable, you must remain hungry so that you keep looking out for opportunities that allows that business to grow and scale. What I'm saying in essence is that whether it is, banks you have as partners to your business who fund your business, or you have equity partners in your business, I think fundamentally what is important is that the business is aligned and all parties are aligned. So if you're supposed to be getting X amount of returns as an investor, for instance, you don't want to go to the investor and start to renegotiate that. But you must carry them along and have those conversations. Even as things turn, they can also even give you opportunities to be able to extend yourself beyond what you will have done. Because at the end of the day, they are all in business. Investors look at PE firms, VC firms. They are in the business of turning businesses around so that they can make the multiple times of returns that they want to get. So if you've committed to say 5 times return, and then you're coming back to say we won't be able to meet as much as that, they don't want to hear it. The question is, what do we need to do? How do we have to navigate that? So the question is, at the end of the day, you just have to stay in tune with what's going on in the economy. Understand what's going on in your business, know exactly what it is you want to achieve as a business, and just keep charting that course. Things will come, life will throw curveballs at you. Even the business will go through all of these challenges as it comes, but you have to remain adaptable. You have to remain resilient. You have to ensure that, you don't allow anything take your eye off, the goal at the end of the day. So you stay true to it.
I'm wondering if it's true what they say. You put air quotes on what they say, there are some schools of thought that believe that women make better, will they recover better when it comes to economic downturns? Is this true? Have you any research to defend it? And if it is, in your opinion, what exactly could be the leading cause of that?
I don't have data that actually supports that, but I would say that I think one thing that women do better is they are very great at managing, stormy situations. Women are natural nurturers, and women know how to sort of curtail bad situations in terms of really managing it. Men are very logical. They go at things, they make the decisions they need to make. Women are great at stabilizing through crisis, right? And I think for those of them that have also mastered themselves and mastered the act of really, running their business properly, they are stable in terms of emotional capability to be able to weather that storm and then take their businesses to the next level.
Yeah.
I don't know whether women are better than men, but one thing I know that works well for a lot of women is the fact that that nurturing instinct comes through immediately. Think about how a lot of people were responding during COVID. Right? That was something that really hit a lot of businesses. Most people didn't even know how to respond to it and what the implication of that could mean for their businesses. You see that a lot of women were the ones responding with, a lot more kindness, a lot more empathy for the people that work with them, and really just generally having conversations to ensure that everybody is on the same page and they're sort of going through the motion, and wherever this leads us, it leads us. You see what I mean? So I think that women are great at, staying the course, and staying true to what it is they want to do and weather the crisis. But I really don't know whether they do it better than men. Everybody has their own strengths that comes to bear whenever crisis situations happen, and it comes to play.
I have a feeling our friends on social media will be helping us answer that question, possibly. And we'd love to hear your opinions on that. Do you think women are better at weathering the storm? But before we go further in that direction, let's see if we can get some strategies from you. Some key strategies that can help a woman watching right now to weather the economic downturn that we're facing presently. We know that the price of petrol has skyrocketed. The inflation against the dollar is another story. Some people don't even know if they've made profit in the last 1 year. What sort of strategies do you think people can put in place to protect themselves?
First of all, I don't know that you should not know whether your business has made profit. If you're a serious businesswoman, you should know where your business is in terms of your finances. And that's what I tell people. You have to be aware of what is going on in your business and how your business is able to respond to what is going on, how much resistance, how much reserve you have in terms of, your financial, or will I say cash reserve, so to speak, right? How much can the business tag along in the event that it doesn't really make a lot of profit? Do you have retained earnings that can at least, carry the business and continue to be in operations while, you're sort of going through the motion with all that is happening? I think that as a businesswoman, you must know that. You must establish that, right? Because it's on the back of that you can then start to take measures that help you to, still stay strong and resilient in the face of everything that is happening. Now, this is affecting different businesses in different ways, depending on where you're playing. So, for instance, if you run a business that is largely import dependent, you can already tell that, that's going to be a huge hit, on your business. And apart from that, even just looking at inflation, looking at the fact that disposable income for a lot of people, has reduced, what that means already is that revenue is likely going to shrink because people can't afford as much as they used to do before, or they are going to start cutting out certain things that they consider as non-essential, maybe luxury things. Okay. So if your business is luxury item, goods and services, you can already imagine what that would do to your revenue, right? Sure. So what that means for a woman in business running those sort of businesses, to start to look at what are the other alternative income generation opportunities that you can start to explore. What are the low-hanging fruits that you can start to take advantage of? What sort of partnerships, collaborations outside of your immediate business that you can start to leverage on just to create new opportunity for new income streams to come in? So I think for me, it's really about just just looking at, how is this affecting your business in terms of your top line, your revenue, and of course, in terms of your cost base, the cost profile of your business. You have to think about, the operating cost. What's it costing you to keep your business operating, right? And what are the excesses that you have to take out at this point in time? Excesses now could mean that you want to leverage technology to do more things, and so you're not going to need as many hands, right? And so it may mean that you're shedding some of your staff and reducing staff costs. It may mean that, some of the other things that you've always done before, you're not as aggressive in those things. Maybe your marketing budget might reduce, maybe your admin budget might reduce, or different areas. But you must understand the financial position of your business so that you see the areas of gaps or the areas of excesses, and then you can really just target those areas.
I feel like asking this question now because you touched on the fact that luxury goods are usually the first to go. They're the first off the list of essential buying. But what are those businesses, in your opinion, almost always weather the storm? I think, off the top of my head, I think food business is one of those.
Oh, yes.
Food business, for some reason.
Yes.
Okay.
Food, transportation. And many times, if you just think about what are the things that people need on a daily basis, right? Maybe skincare, cosmetics, and those things are things that people would always use. Any which way you must eat now.
Okay, true.
So if you're in food business, people would eat. It doesn't matter what is going on. People will eat. People will move from place to place. Anything that has to do with what people use on a daily basis, people will continue to use. Now, what may happen is that if I used to buy 10 before, I may not buy 10 at a go. I may buy 5. I may buy 3, but I will still buy.
Okay.
Do you see what I mean?
Yeah.
Right? So if you are in non-essential products and services, clearly you will still continue to see patronage. Yeah. It may just mean that you're not hitting your numbers the way you would want to expand and grow your numbers, but you will still be in business. Yeah.
But in the end, doesn't that mean, I really want to touch on this. Doesn't it mean that dream business that you had in mind might not be the key business for you in the end?
No. So what I would say is that maybe for this year or next year or maybe 3 years, I don't know how long this is going to take, you may not hit your numbers, but it doesn't mean that your business essentially has changed or will change.
Okay.
Now, I'm not even saying this as a matter of fact for every business. Some businesses will change. Some businesses will have to rethink their business model. And ask themselves if this business model is really still sustainable. Because if your business model is no longer sustainable, then something has to change, something has to give, right? So you have to think about it holistically and look at where is economy, where are the opportunities, how is the market changing, how are your customers' preferences also changing. You must be very adaptable. And be willing to change and move as the market is moving. You can't afford to just stay and say, this is what I want to do. This is what I always wanted to do. This is the kind of business I want to build. What if the market is no longer there? Market has moved.
Wow. Okay. Well, Women's Wealth is the kind of show that helps you make some important money moves. And one of those money moves might be moving as the market moves at this point. Thank you so much for joining us once again.
Absolutely.
It's a pleasure having you here. Please don't be a stranger.
Okay.
Please pop back into the studio once in a while.
I surely will.
There's still loads to talk about, but there's never enough time. At this point, we're going to throw it to you on social media. You'll be seeing the important handles right there on the screen right now. Just make sure you connect with us. Make sure you answer that question that I asked earlier. What do you think? Do you think women are better at weathering the storm? Have you keyed into some of the strategies we got from her today? Hopefully you have. It's still Women's Wealth. Stay with us. You're still watching Women's Wealth, brought to you by CM Trading. My name is Titilayo Oyinsan. Thanks for joining us. Today on Women's Wealth Management, our investment option in focus is silver. Silver was treasured by many cultures, and the use ranged from ornamental to medicinal. Many wealthy families owned silver utensils, for instance, jewelry, religious talismans, and even decor. Silver was also used as a currency in trade and for the payment of debts. A gift of silver, for instance, was seen as a symbol of trust and love. Silver was paramount to East Asia's introduction into the global trade market under the Ming and Qing empires. China even hoarded silver to boost its economy and increase its trading power. In fact, many historians argue that silver was responsible for the birth of global economics and trade. And in addition to global economic changes in the silver trade, it also put motion to a wide array of political transformations in the early modern era. This commodity, against all odds, finished 2022 higher, and right now it's bounced back to $22.8 per ounce. Imagine that. It's remained close to a nearly 2-month low around August, pressured by prospects of elevated interest rates following the minutes of the Federal Reserve's July meeting and hot U.S. economic data. Also, the strong dollar and higher treasury yields continue to weigh on this metal. Solid industrial demand and tight supply provided support, and efforts to curb carbon emissions sped up the development of solar panel technologies. They have higher conduction needs, causing sharp upgrades in forecasts for silver demand. Solar panel companies, for instance, are expected to make up to about 14% of the global silver consumption market, compared to 5% in 2014. So, ladies, just like gold, this is one commodity you should invest in. Don't just view it as jewelry. Make some money and build wealth with it. That's our investment option for today, ladies. This is Women's Wealth, brought to you by CM Trading. We'll be right back after this. It's time for us to find out what's happening in the markets. Are the markets in the green or in the red? Let's find out. It's time for In the Market, and it's all about the bear market today. What is it? Where did the term originate from? Bear market is the industry-specific jargon which indicates a downward trend in the overall condition of the market. It means that the cumulative market prices of the stocks listed on the stock market are declining. The bear market phenomenon is thought to get its name from the way in which a bear attacks its prey, swiping its paws downward. This is why markets with falling stock prices are called bear markets. It's also been said that investors who sold bear skins they did not yet own were also called bears because they expected a price decline. And so, if the stock price of a particular stock is plunging, it's considered to be bearish. Usually in a bear market, there are more sellers than buyers. Bear markets are typically caused by investors' pessimism, fear, negative sentiments about the market or the economy. Other reasons are poor company performance, a weak economy, high unemployment rate, high inflation, and more. There are other reasons for a bear market, however. A popular example of a bear market was March 2020, when the stock market fell due to COVID-19. That's all on In the Market on Women's Wealth. We'll be right back. We've come to the end of this episode of Women's Wealth. Follow us on our social media platforms at Women's Wealth on TV. My name once again is Titilayo Oyinsan. Bye for now.